All right, welcome back. We are back on schedule with our weekly stock market update and another doozy. These weeks are just unbelievable, the amount of action that's going on. So let's take a look here at the indices. We've got the NASDAQ almost hit an all-time high this week and a sharp pullback Friday today, and that is the case across the board. We all got close when it comes to all-time highs, and then a big flush on Friday. We'll have to wait and see what next week brings, and we'll go over the news why there was such a flush today. So first, looking at the charts, NASDAQ, aggressive pullback on the short term, long term, wonderful uptrend. So let's take a look at the S&P 500, which did hit an all-time high this week, and pulling back from that. Again, when we zoom out, very strong, beautiful uptrend. Now we start breaking below this green line, who knows what happens. Again, we're not, in my opinion, I don't think we're going to see some big drawdown to 4,000. That to me is not in the cards. So a little pullback going on here. We've got the Dow Jones almost all-time high, hit an all-time high a few weeks ago, January 25th. And a little bit weaker than some of the other indexes. The Russell 2000 is definitely the weakest of all the indices. Big pullback. Maybe this is support. Maybe we finally get a breakdown. We'll have to wait and see. We've got oil, huge pullback this week. Got up to 74 and just nothing but flush after that. Probably look for a bounce next week. But I feel like oil wants to get in the 60s. We'll have to wait and see. Bitcoin, Ethereum, terrible. Bitcoin pushed 100K again and just hit a wall, instantly pulled back. I just released a crypto market update if you want to see some more when it comes to the crypto world. Gold did hit an all-time high this week. It hit an all-time high Thursday. So congratulations to gold. I actually sold some gold yesterday, and we'll be looking to reinvest that into some of these juicy dips we may be getting in the stock market. Let's look at the dollar. Dollar on a nice pullback here, which is good to see. This is going to help the stock market and crypto market as well. So we're kind of at a real important level here for the dollar. Is this a pullback and retest before it makes its way up? Or are we going to break through and head back to the next level? Kind of important deal here for the dollar. And let's look at the mortgage rates, not doing anything. The yields did come down quite a bit, even today as well, down quite a bit. So this is good news. Again, we're at a similar spot, same as the dollar. Interesting level here. Is this a breakout, retest, and then we resume our trend back up? Or are we going to break down and set a new trend? Let's wait and see. So the market is dying for lower rates. The Fed can't lower the rates for you. The market has to do the work for the Fed. And a week like this week was good news for the Fed because everyone wants lower rates. The Fed can't come out and do it because inflation is hotter than expected, but it'll help the economy from having a collapse or a bump in the road, a Silicon Valley Bank, something. So let's take a look at some of the big name stocks. We look at Tesla. Tesla looks destined for under $300. Maybe $275 is where we find some support. I'm going to put a line at the 270 level. To me, again, a breakout of this former resistance. We pull back, use it as support, and then resume our next leg up. That's healthy. That's healthy technical analysis. So Amazon pulling back as well. Nice healthy pullback from its all-time high. So some of these are getting interesting. I hope I have time this weekend to do a shopping list video. I need to do it for myself. I need to do it for my clients. And I think it'd be helpful for everybody because we are getting to the point where it is, I need that list ready to go because this market is fast and loose. and you need to be organized, ready to know what you want to buy and at what price so you can execute. So have your plan and then just execute it. So I need to get together my shopping list. What are my highest priority buys that I want to make if we keep getting a flush down? And that way I don't have to think twice. I just execute my plan. The SMH pulling back a little bit, had a nice few weeks. Google, another one. To me, this is looking interesting. I want to see where we find some support. Google had great earnings and 96 billion in revenue last quarter. So I still love this business and it's pulling back. What's not to like? Nvidia earnings next week, big week next week for technology and obviously for Nvidia. We have regained all the losses from the deep seek. We filled the gap. We dropped down at 142 and we immediately bounced back up, filled the gap. Kind of makes sense for it to pull back a little bit more. Keep chopping sideways, but I do expect it to hold over this 115 level and then eventually make its way back up over the all-time high, 150. So very interested to see what they have to say in their earnings. The triple Qs, QQQ, nice steady uptrend, big down day. So we don't get a lot of these big flush days when it comes to the Qs and the NASDAQs and the S&P. So we'll see how much follow through we have on this, or if this was just a little, let's draw a little line. If this is just pulling back and then we keep up this uptrend, who knows? Anything else I want to talk about? Not really. We've got a lot of earnings. Palantir, this looks sketch. Now I really like Palantir, but seems like this gap, again, I'm not trying to be Mr. Technical Analysis, but it seems like this gap probably should get filled. Now we had some defense spending news. We had some CEO selling stock news. Again, this is a phenomenal business, but it's pretty rich, but you get what you pay for in the stock market. Just look at the performance of this company, stock price. So I wouldn't be out of the realm of possibilities to fill this gap get down to $80, consolidate, then make its next move up. Again, healthy. Intel, a lot of rumors going on about breaking up Intel, someone buying it, a lot of talk going on. I'm super interested to see what happens here. This is a very essential business and it's a dog. It's beaten down. So to me, need to see a little bit more news and I need to see a little bit more of a breakout because this could just be a bounce in this downtrend that we have here. But this is interesting for a longer term play. But I'm not jumping for joy to get in right now, especially when you're seeing blue chips like Amazon drop and Google drop, and Microsoft around 400. Meta pulled back, finally had 20 days or so of green. Now we've got 4 days of red in a row. So healthy pullback here, can't go straight up forever. Interested to see where that finds some support. Apple looking good as well. I do have some protective puts on Apple. I don't own any Apple stock, but to me, this is a very high valuation for Apple. And if the market's going to keep pulling back, it wouldn't surprise me if Apple's down to 230. So puts are cheap in Apple. I bought some puts in Apple to protect the downside. If we keep getting some downside, I don't mind being a little short Apple. You're not going to get huge moves, but because of that, the puts aren't that expensive. So again, not financial advice. That's something I'm doing to help hedge my portfolio, as well as selling covered calls on the stocks that I own, like Tesla and Amazon and Nvidia and Google. Those covered calls are making me some profits, so I can reinvest that into buying more of the shares. So that is the technical portion. Now let's get into the news. So news this week: S&P record high, Dow Jones fell 1.7%. Gold record highs. Let's see, gold's projection at Goldman Sachs is being raised to 3,100 per ounce. Wow, huge forecast. You're asking it to go up 5%. But gold looks strong. I'm very interested why there's this sudden surge of gold buying. With some of the geopolitical stuff going on, are people getting prepared for the next wave of things, or it sounded like we were going to get some resolution on some things, but maybe not. So who knows? We'll have to wait and see. So a lot of concerns when it comes to tariffs. You've got uncertainty with interest rates, uncertainty with Russia and geopolitical stuff. And then if you watch my Amazon video, there is also some concern about the consumer being a little weaker than expected. Walmart had a poor guide for their revenue. Amazon had a softer guide for their revenue. But the market really didn't like what Walmart had to say in their earnings. They are only projecting a 3% growth this year on their revenue. So we'll have to wait and see how much follow through that has. I don't know if it's included in here. It is not, but we did have a lot of economic data this week. Let me pull some of that up. We did have the consumer sentiment, and that was very low, so the consumer's not feeling that great. And then we do have some higher inflation expectations. Where am I at here? We're looking for the economic calendar. Okay, so this week you had the PMI, which was a little hotter than expected, and the consumer sentiment, which was at 64.7 of an expectation of 67.8. So that is a big red number. Home sales is also bad. I'm seeing the home builders get beat up. That's just the higher for longer interest rates. So we're in a very tricky spot in the economy where the cost to borrow is high. The cost to do anything is still high. There's all this regulation. You've got people getting laid off in the government, so we know that the jobs numbers in March are going to be bad. And so you've got a softer consumer already. What happens if you're a consumer who is working in the mortgage market, the home building market, the government? What if you're in that sector and your business is softer than expected? So there's all these factors that are kind of brewing and have been brewing for a while that don't look that great, and we need to resolve them. And ironically, I've been saying this for a while, one of the best things to solve this would be, let's rip the Band-Aid off, go through a short recession, let things cool down so the inflation cools down so the Fed can cut rates. That'll entice people to buy homes, build homes, whatever. That'll allow the banks to lend. So there's just a lot of stuff like that are building up, and one after another keep popping up. So on top of that, we do have the big tech earnings that are mostly done. Earnings look great. They're doing well. They're spinning like madmen. So those big juggernauts are going to do well in a lot of environments. Their multiples can compress, so their stock price can go down. Their valuations can go down if people need liquidity. But long term, those businesses are doing very well. I don't have any concern with those businesses, the Mag 7. They're going to ebb and flow in stock price as the economy ebbs and flows. And like I said, people need liquidity, but those businesses are booming. So next week, I said we have NVIDIA. Let's take a look at any other economic data that we have. We've got GDP numbers, employment claims, a bunch of Fed people flapping their gums, PCE numbers. So GDP will be interesting. Quarter over quarter, expected growth of 2.3%. And then we got some employment numbers. So we'll see how some of that data comes in. Again, it's the market's reaction that is more telling than the data itself. So that is all I got for you guys for this video. Have a great weekend. Look for a shopping list video and watch my Amazon video and watch my crypto market update video if you haven't already. So that's all I got for you guys. Have a great weekend. Peace out.